Hello Freedom Traders, this is your guy Collins FT. So today we're gonna do something different. We're gonna do back testing. Yeah, we're gonna do back testing as usual. We pick a random pair. I'm already at the GBP card, but I prefer we pick a random pair as usual. Let's go to New Zealand US dollars. Okay, so instead of doing usually like we analyze and we give out a signal, what I want us to do today is to do a replay. Yeah, back testing and replay, so whatever you call it. So we start from here. This is to work out my strategy and my analysis. So let's go, guys. First, as I said, first thing we do is we pick out the pair. We look at the structure. We see if it's going down, the market is on a downtrend or an uptrend. So as we can see, the uptrend was already broken here. There was an uptrend that was broken already. Market is trading already below the moving average, and actually it's a downtrend, so we can actually make it so a downtrend that seems to have been broken again, and then we have a little uptrend here that is starting. Yeah, we have an uptrend here that is starting to form. Okay, guys, this is very quick. These are guides to guide us on which direction the market is going to and how we should follow our analysis. So zooming in, it comes out very clearly now. So we go, next thing now, it's our levels. We put our key levels. These levels are the most determinant factors that will guide us through our analysis. Yeah, so as the market is going up, we put up our levels here. Then what we know now is the market will hit here. Then whatever it does here will determine if it will continue to hit here or it will come back and test this trend line. So something like this. Whatever is going on, we know the market will end up hitting here, and then maybe going up to hit here, or will come down, hit this downtrend, either break it or bounce back and continues to go up. Yeah, so these are the possibilities. Very simple. You don't have to complicate the market, guys. The market is very simple. We don't complicate it. So this was another minor level down here. Yeah, we can consider it, though it's very small, but we can consider it because it will act like a support or resistance as we go along. So let's go down to the daily. With this bar replay, we cannot go beyond the daily. We can only end at the daily. So you see how everything works out to be so perfect. So the one I considered just a small level here was actually a big level. So now, as per our analysis, we think the market is gonna hit here, or it might come down here and then continues to hit. But whatever it is, we think the market is gonna hit here, or it's gonna test this trend line and break it, or bounce back and go up. All of those things I put there is because I was in the higher time frame. So here, those things can happen just around this area. So first we know the market is going to hit here for the meantime, because it broke already this level. Since it broke this level, it hasn't hit this other level yet. Whenever it breaks, it has to hit before anything. So right now, let's see what the market is doing. So we'll be analyzing candle by candle. It's gonna take some time, but at least it's gonna help us understand more. So you see, this is very determinant, a bullish momentum. This, it broke here already, but usually when it breaks, it has to retest before going up. So it retested. It hasn't given us a signal, a confirmation to enter here, but this is kind of a confirmation because it's a kind of double bottom here. So let's check it out. Yeah, as I said, it didn't give us, because when it breaks, it goes up, it comes down, it has to give us a confirmation. So this wasn't actually a confirmation, because when you look at this one, when you look at this one and you look at this one, they are different. You see, they are different. So let's go, guys. A hammer, yeah, but what we are waiting for is a bullish engulfing above this moving average. That is a good confirmation. If we don't find one, but we need a double bottom that is completely flat. Okay, so this is it, guys. This is what I was saying. Exactly what I was saying. So this is the bullish engulfing I was talking about. But well, let's see if it closes. Like, okay, it closed. So this is the bullish engulfing I was talking about above this moving average. Yeah, because whatever this is, whatever is going on here, if you don't find this confirmation, it's nothing. We know the market is going to hit here, but when to enter, it's an issue. Usually it's always advisable to enter above the moving average or above the resistance to buy. But are you going to enter here? No, the market just broke. Bears are still there. The banks are still going to come down and collect all the stop losses that were put here. Here was another, it went up again. But yeah, as I said, there should always be a confirmation. It broke here, came back here. It didn't give any confirmation. It went back up, came down. This was a kind of reversal, but with this tail, it's not complete confirmation. So it went up again, came down, no confirmation, because I'm not seeing a hammer. Because first thing, a signal to buy is the hammer. Then the second thing, confirmation to enter, is the bullish engulfing. That is for buy signal. So here, this was just a because moving a bullish momentum, which ended with a long wick, by the way. I kind of thought it's a signal, but it was not really a very good clear signal. That's why it went up here, came back again, gave us this. This is what I was talking about, guys. You see a hammer. When you see a hammer, it's a signal, but not a confirmation. So you wait. You cannot enter here because you found a hammer and it's below the moving average. So if you are buying, always try to buy above the moving average, else, or unless you are very confident with your signal, or you find this bullish engulfing candle after this hammer below the moving average, then you can buy. So this is already a good one. Now we are expecting to take our profit here. This is very risky, guys. I don't know, but This is how we have to trade. You don't just, you trade even if the trade goes against you, you know that your setup was good, you did everything right. Yeah, so you can even enter here with a buy stop. You can enter here with a buy stop. um, it's still fine, and put your you can go down to the 15 minutes to put your stop loss. So let's see, guys. You see, it hit directly straight. So that is how we do it, guys. That is how we do it. Yeah, so it hit our take profit already. You should be out. So the resistance was at what? Resistance was at 0.7166, and then the market reached at 0.7147. So it's not bad, and it's not yet done. We still going. Boom, it hit already. So guys, you see it, that is how it's been done. Yeah, that is how it should be done. First this one, second this one, confirmation, you buy here. Never mind you lost. The fear of missing out is a big issue, because now you'll be like, oh, you should have entered here. Then you start looking for signals. What is it here that could have made you to enter? Absolutely nothing. If you know already that when the market breaks a level, it will consolidate, it will do whatever drama it's got to do, but yeah, it has to give you a signal and a confirmation before you enter. So before then, before this happened, on our weekly, what did we say? We said we're thinking the market is gonna come hit here, come down and retest this moving average, and then continues to go up, but it can still broke here and then just continue straight up. So but before then, same thing that happened here, we're still gonna observe here as well. So this was a clean how many, because when you find this, when it closes like this on Friday, on Monday, first thing you have to do is you put your buy stop and you chill. So if you did put your buy stop at say 0.6, or let's just say 0.79, no, it's very clear, it's clearly on the 0.6982. Then taking your stop loss, taking your profit at this at, say at 0.7155, that is about 150 pips straight up, and that is 150 pips, very clean. So let's see how it behaves here. As I said, it could break, go up straight away. So when this happens here, it's a long go. It's a long go. It's different from this one. This is just a momentum. Nothing here to tell us the market is going to go far. That's why it didn't go far. So you see, with all this drama, you are already out, because you take your profit here, because what you did here, you still have to do the same thing here. So it broke, came back and retested. Now it's going up to break again for the second time. It came back, so it's gonna still do the same thing. Retested, it's giving us a hammer. Okay, so guys, there is one thing also. This hammer is above the moving average. Yeah, this hammer is above the moving average. There is high probabilities that it can just now shoot up, because as per our analysis, this is a very big long trade now, because it's going to come right up here. So it's a good one. Let's see if that is real. Actually, it's yeah, actually we still have still have a lot of levels. Yeah, we still have a lot of levels here. We can consider this as a level, and yeah, and this also as a level. So if we did consider both of them as levels, then this could be shooting right up here, guys, with this hammer, very clean hammer, giving us a very clean hammer above the moving average. That is a good one. So it can be shooting right up there. So this is not you cannot put a buy stop here because it's not a clear traditional signal. Yeah, it's not a clear traditional signal. We are just gonna look again. If there are more indications, then we can enter. Yeah, as I said, it's really not a clear one. So why I entered here is just because of this hammer above the moving average. So if we were about to enter, it will be advisable to enter here above the hammer, not after the market has almost exhausted here. So, and by the way, the nearest level to take profit was not even this one, should have been this one already that was created just of recent, unless we are greedy. Because with this hammer here, you enter here, you will be expecting to take profit up here at the next level. Yeah, so we could still say it was a good trade. Yeah, with the hammer, we could still say it was a good trade. So still yet, we're still expecting the market to go up again. So that's why we are not bringing down our, still keeping it there. Okay, now guys, you see this hammer. So what's the next thing we are waiting for? We are looking for an engulfing candle. So that's the next thing we are looking for, an engulfing bullish candle above the moving average on top of the level. If we don't find anything like that, we are not buying. So let's go. Okay, this was kind of a bullish engulfing. You see how the market works, guys. It will not give you a fake confirmation. So it didn't complete here. As you can see, this was not complete. It was not an engulfing, a bullish engulfing. So let's see what happens next. Okay. Oh, you see. Okay, now it gave it here. This is it here, guys. As I said, always after the hammer, you wait for a bullish engulfing candle before you buy. So it gave it here, and when you are buying, it's buy stop. You don't just see it and then you just enter. No, you put it here, you put your buy stop at this level. You put your buy stop at this level, and then your take profit wouldn't just be here, but you should be expecting this. You should be your first take profit, which will be 0.7256 to 0.7325, which is almost 100 pips. Yeah, so whatever the market is doing now, it didn't touched, your buy stop has not been touched yet. So this is unusual for the market. That's why you say you wait for the markets to come to you. You don't rush and go for the market, because whatever is happening now, we have no clue. So that's it, guys. That's it. You see, first it did hit, it did touch your buy stop here. It only triggered your buy stop, came back right here. You see, because when you put your buy stop here, you have to be expecting the market to either come back right at this bottom. So you have to check also uh, your moving out. Sorry, your account, your stop loss. You know how you do it. You have to risk management. So at the end of the day, if you shifted your buy stop or you just kept it here, then it would have just triggered or up here and hit your take profit before coming back. So, but yet at the end of the day, it still went up there, guys. So we just need to expand like this for it to be clear. Yeah, for it to be clear. So that's it, guys. So that's it. You take your profit here, and you are good. You are good for the day. So we're gonna do it again next time, guys. And this is the simplest, most. Even there is this guy, FX Daniels. He's one of the most popular forex traders. He has failed on this back testing several times, several times. So this is something that if you can work it out and be able to control your emotions and manage your account balance and your lot sizes, your stop loss, then you're gonna consistently be profitable. So thank you, guys. See you again.